Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Sharda Cropchem Limited, hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Stephen. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Sharda Cropchem. From the management, we have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Ashok Vashisht, CFO, and Mr. Dinesh Nahar, GM Finance on the call. Without further ado, I would like to hand over the call to Mr. Bubna for opening remarks, post which we will open the floor for Q&A. Thank you, and over to Bubna ji.
Thank you, Manish. Good day, ladies and gentlemen. A very warm welcome to everyone present here for the earnings call of Sharda Cropchem Limited for Q1 FY22. Sharda Cropchem is represented by myself, Ram Prakash Bubna, Chairman and Managing Director, our Chief Financial Officer, Mr. Ashok Vashisht, and Mr. Dinesh Nahar, General Manager Finance. Talking briefly about our Q3 FY22 results. Revenues grew by 78.2% year to year from rupees 494 crores in Q3 FY21 to rupees 880 crores in Q3 FY22, led by strong volume growth across geographies and better product mix and price realization. Europe grew by 124%, NAFTA grew by 76%, LATAM grew by 18%, and rest of the world by 19%. During Q3 FY22, agrochemicals to non-agrochemical mix stood at 82 versus 18. Agrochemical business grew by 80% year on year. Europe grew by 124% year on year. NAFTA grew by 82%. LATAM grew by 27% year to year. Rest of the world grew by 5%. Formulation and active mix stood at 94 versus 6 in Q3 FY22. Non-agrochemical business grew by 71% year on year during Q3 FY22. NAFTA grew by 52%, Europe grew by 127%, rest of the world grew by 80%, and LATAM grew by 36%. The company continues to strengthen its product portfolio by prudently investing in new product registrations. Sharda Cropchem's total product registrations stood at 2,645 on 31st December 2021. Additionally, 1,099 applications of the product registrations globally are at different stages of approval. The capex stood at rupees 203 crores as on 31st December 2022 versus 170 crores in the same period last financial year. With this brief overview, I would now like to hand over the call to our CFO, Mr. Ashok Vashisht, for discussing our financial performances.
Thank you, Mr. Bubna. Good evening, everyone on the call, and thank you for attending the call. I'm pleased to give you a brief on the quarter 3 performance. During the Q3 FY22, our revenue surged by 78.2%, which was mainly driven by strong volume growth of 50.9%, favorable price and product mix to the tune of 26.5%, coupled with exchange gain of 0.8% during the quarter. On year-to-date basis, that's for 9 months, revenue grew by 64.1%. So we reached to 2,145 crore in FY22 from 1,308 crore last year, same 9 months. Gross profit for the quarter grew by 75% from 171 crore in quarter 3 FY21 to 298 crore in quarter 3 FY22. Gross margin slightly reduced to 23.9% in quarter 3 FY22, mainly because of slightly high freight cost. On geographical mix, Europe region was the highest contributor during the quarter 3, followed by NAFTA and ROW. In terms of year-to-date, gross profit grew by 57.8% from 419 crore last year, 9 months, to 661 crore in 9 months FY 2022. EBITDA registered a very strong growth of 97.1% for the quarter. We recorded EBITDA of 201 crore in quarter 3 FY22, and the EBITDA for the 9 months ending this 31st December 2021 was 102 crore. So thereby growth of 97.1%. The EBITDA margin expansion was by 222 BPS, and we reached to 22.8% in quarter 3 FY 2022, mainly driven by economies of scale, effective cost management, and which was marginally set off by the higher freight cost. Year-to-date EBITDA grew by very impressive numbers by 96.6% from 209 crore in 9 months of FY 2021 to 411 crore YTD 31st December FY 22. Profit after tax grew by 112% from 48 crore in quarter 3 FY 2021 to 102 crores in quarter 3 FY 2022, thereby growth of 112% on quarter-on-quarter basis. Year-to-date profit after tax, that is for the 9 months, grew by 80.8% from 95 crore in FY 2021 for 9 months to 172 crore in FY 2022 on year-to-date basis. Cash profit stood at 161 crore as compared to 89 crore in quarter 3 last year. We continue to focus on working capital efficiencies, and net working capital in terms of number of days stood at 72 days as at 31st December 2022. Thank you very much again for being on the call. We now open the floor for the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Taran from Old Bridge Capital. Please go ahead.
Hello, sir. Good evening and congratulations for extremely strong set of numbers. I have 3 questions. Number 1, sir, if you could give us some sense on different components of capex for a registration in terms of costing? Say, for instance, when you're incurring capex for a registration, how much would it cost to get the bioequivalent studies? How much would registration take, and what are the other components? And typically the time it takes to get a registration up and running.
Hello. Are you finished with your question, Mr. Haram?
Yes, sir. I have two more, so I'll just finish them as well. Also, while you are at it, if you could, within the geographies that you operate, some sense on the timing differences of getting the registration approved across geographies and the cost differential, like which is the most expensive, how much would it be versus some other geography that you would typically get your registrations done. And third, if I see your presentation, you've spoken about penetrating deeper into certain markets by deploying your own field force. So what's the thought process behind it? Are you what is the incremental sort of spread that you get on realizations by doing that, and what are the strategic advantages that the business gets by doing that? Because I would presume it would also involve front loading of a lot of costs onto your P&L. So yeah, 3 questions from me, sir.
Okay. Mr. Dharam, I'll answer your questions one by one, but the question has been very long, so maybe I forget it on the way. First was the components of capex.
Yes, sir.
Now, this is something, if you have been tracking the agrochemical companies and the registration costs, this is absolutely undefinable. It depends from product to product, country to country, and even within the same country, depends upon a lot of bureaucratic processes. So it is endless. We have to, sometimes one registration may take 3 years, and another product in the same country or same geography may take 6 years or 7 years. So that is very difficult to give you these components of capex. What was your second question, Mr. Dharam?
Actually, it was something which is sort of... So typically, which geography would be the most expensive? Say, if you were to get a same registration done, which geography would it be more expensive than the other, the most expensive? And in terms of timing, how much time would it take in which geography commands the most or is most stringent when it comes to the timeline for getting the registrations?
The answer to both the questions is Europe, both in terms of expensive and timelines. Sometimes a product to register in Europe may cost you 4, 5 or 6 million euros, and the time can go as high as 8 to 9 years.
And that will be homogeneous across Europe?
2 to 3 million euros and get a registration in 2, 3 or 4 years.
Okay. And that will be homogeneous across all of Europe?
Pardon me?
That would be pervasive across all the countries in Europe?
No, sir. The first registration. In all the countries in Europe, we go step by step. We receive registration in one country first, and then expand our base to the second, third, and fourth countries. Here also, the lab results and the active ingredient is approved by one country, which is nominated by the European Union for every product. So that country first evaluates the equivalence of our product with the original product. After having received the approval and registration of the active ingredient, then we apply for the formulated product. And the formulated product has to be approved by each country individually.
Okay. Got it.
And then third step is the number of crops. We get the approval for one crop and then slowly expand to other crops for which the same product is applicable. So it's a very continuous process, long-term process, and very expensive. it needs a lot of patience.
Got it. And so you spoke about, deploying additional manforce on the ground in certain markets, which my sense is maybe getting closer to the farmers than you already are. What kind of additional realization would this involve? I mean, I'm pretty sure your margins would be a lot better for you to probably do this. And what kind of impact could we see in your P&L as you start deploying the strategy?
Mr. Dharam, most of our products are sold to the distributors, not to the direct farmers as far as we are concerned. The products go from distributors to the retailers and sometimes directly to the farmers. The only contact we have directly with the farmers are some cooperatives who buy in a bulk way and then distribute to their members. We put people on the ground, force in the ground, only to get the feedback about the usefulness of the product, performance of the product, and demands and things like that. But the dealings are done with the distributors.
Okay, because the presentation said forward integration, build own sales force. So that is again would be restricted to the distributors, correct?
Yes, sir.
Okay. Okay, that's it. That's it from me. Thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may we request you to rejoin the queue. The next question is from the line of Pujan Shah from Akash Ganga Investment. Please go ahead.
Hello, am I audible?
Yes, please. But what is your name? I didn't understand your name properly.
Pujan Shah.
Pujan.
Yes.
Okay.
So my first question would be on this. We have a great growth in this agro business, and so can you just give us a brief outlook about this such a type of growth, and would it be sustainable for, you can say, for next 4 to 5 years? And which new are we getting traction from these new products which we have registered, or it has been getting a traction from our old products only, old product portfolio?
Mr. Pujan, it is both. Getting traction from the old products as well as the new products. New products takes little extra time to establish, to find the acceptability in the market, but the old products who have been already established and accepted by the markets, farmers and consumers, it also depends upon the weather, many other factors to get the traction.
Okay, sir. Okay, sir. And sir, on the industry outlook, if you can give some broad guidelines.
Beg your pardon?
Industry outlook for agri-business, like will it be a sustainable, or you can say this would be a sort of a 3 to 4 time event which we are seeing, or which we are seeing from China Plus One, or any sort of a thing? Can you just give broad outlook on industry?
Sir, the industry outlook is very good and positive. As you know, the population of the world is increasing, and the number of people who need to be fed is continuously increasing, and so is the demand for agricultural commodities and agrochemicals. So we are in this business for more than 25 years, and we are seeing that the global volume of agrochemical demand has increased from about $45 billion to around $70 billion now, and it is continuously increasing. So the outlook is positive.
Okay, sir. And my last question would be, are we focusing right now on any new geographies, or we are focusing on our previous geographies only, and we have been concentrating over there? So can you just give some broad on that idea on that?
See, Mr. Pujan, we have been dealing with most of the geographies for the last many years, but now we are concentrating on enlarging our portfolio for each geography.
Okay. Okay, sir. Got it. Thank you, sir.
Yes.
Thank you. The next question is from the line of Dhaval Shah from Swan Investment. Please go ahead.
Hello. Yeah. Hello, sir. Congratulations on great numbers, sir. Sir, I have a couple of questions. First, to start with, sir, if we look at our long-term sales growth, it has been in high double digit, but something has really changed for the company in the last 4-5 quarters. So if you could elaborate, has our distributor switched a supplier, and chosen our company to procure more, or have we added a new, expanded our market? I mean, what has really changed, which is giving us such, high growth rates and along with good margins? Secondly, we've been procuring from China, and we hear different stories in the last 6-8 months regarding the cost pressure and the supply bottlenecks what China is having. But our company seems to be, quite resilient from all those problems. So can you give us some understanding what exactly, what has changed for us in the last 4-5 quarters, and what sort of growth do you foresee going forward? Thank you.
Mr. Dhaval,
Yeah.
you are talking about last 4-5 quarters. These 4-5 quarters have been very unique.
Yes.
We have passed through such a big crisis, such a big hassles, and so many difficulties. We have been little prudent and in choosing our strategies. We have been able to choose right products and right quantities in spite of increase in the prices, foreseeing that at the end of the day, the world will have to be paying those high prices. So many of these strategies and our direct communication and contact with the markets has helped us in planning these strategies. And I think they would be sustainable.
Okay. So you mean, so this growth rate, what will be the normalized growth rate you think is sustainable?
See, growth depends upon many factors. The number of products and portfolio is one of the important factors, but it also depends upon the climatic conditions, the sort of sowing patterns of the crops and various agri commodities. I feel that the growth rate will continue very positively.
Oh, that's a good statement. Thank you. And sir, but have you won any higher wallet share from our distributor in terms of, they have switched to us because, whatever be the product mix or whatever be the, the price increase, such high 70-60% kind of growth, I'm unable to understand where are we getting that growth from, or did we have some exclusivity for some product in some geography and there? So if you can a little bit elaborate.
Sir, we don't believe in exclusivity, and we don't like to give exclusivity to any distributor for any product as far as we can help. Because at the end of the day, one distributor will be able to cover a limited geography in his territory and not a big way. I think the biggest factor that has helped us is some sort of, our better position compared to our competitors. We find when the competitor, the distributor asks for some products and we try to give him a higher price, he immediately grabs it, which means that the competition has not been able to provide him, and that is a factor that has helped us a lot.
Okay, so did we go and book some large quantities with our from where we are procuring, and because of the supply bottlenecks, we were ready with the product and meet the demand? Has that helped us?
Yeah, something like that. But the path has not been so easy. It's very difficult. The biggest problem that we have seen is in the logistics and the freight and delivery of the cargo. Can you believe sometimes our ship has to wait for 4 to 6 weeks?
Correct.
At the destination ports after it reaches the port. To find a berth from the port, sometimes it takes him 4 to 5 weeks.
Correct.
It's totally unimaginable and unexpected.
Okay.
Clearing the cargo and taking to the consumer may take another 2, 3, 4 weeks. So we have been able to very I won't use the word smartly, but we've been able to perform better on these fronts compared to competition.
Okay, more efficient. Got it. So, sir, when we...
So sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please? Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Soumya V from Spark Capital. Please go ahead.
Thanks for the opportunity, sir. My first question is with regards to the volume breakup that you generally give across geographies and the gross margin breakup across geographies.
1 minute. I'll give you in breakup first. In Europe,
sure,
the volume was 4.35 million. There are 43,58,000 kilograms. NAFTA 32 lakh kilograms. Latin America 7.7 lakh kilograms, and rest of the world 10 lakh kilograms. Totally about 95 lakh kilograms. What was the next question?
The geography-wise gross margin breakup.
Geography-wise gross margin. Europe, the gross margin was in the range of 36%. NAFTA 37%. Latin America 14%, and rest of the world 23%. Overall 34%.
Thank you, sir. That's helpful. The second question is with respect to the raw material sourcing cost. So, are you seeing any slowdown, if any, from China, from the peak that you saw last year, or it's still continuing to remain at the same level?
We have a feeling that from this year onward, starting from 2022, there is some easing of the situation. So in terms of availability of the product and sustainability of the prices, so prices may be slightly declining.
Got it, sir. I'll join back the queue. Thank you.
Yeah.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Good evening, Bubna ji. Trust all is well. Thank you very much for the call.
Yes, sir.
Yeah.
All is well.
Thank you. So just to understand your perspective on the outlook for the coming Rabi and how you see the impact of the high input prices affecting the volume of sales of crop protection chemicals, because in the US there's a concern that the high input cost may result in some slowdown in farmer spending. So what is your view on the potential for growth in volume terms for the crop protection chemical industry for the next 1 year?
I feel that there will be some growth in the demand of these products for the crop protection. The agricultural yield will improve, and the consumption of agrochemicals will also go up.
So you are not unduly worried about the current high cost of inputs impacting the farmer incomes and forcing them to reduce acreage or planted area?
Mr. Ramesh, I feel the worst is over.
Fair enough.
We are on the path for a little more comfort zone than what we have seen in the year 2021 and 2020.
Fair enough. Thank you very much and wish you all the best.
Thank you. The next question is from the line of Bharat Gupta from Edelweiss. Please go ahead.
Hi, Bubna ji. Good evening. Thanks for taking my question. So just a confirmation, like in terms of our revenue split, so what would have been the contribution coming out from the volume growth in the higher realization?
You said 1 minute. See, in Q3 this year, the contribution by the volume impact is about 51%, and for the entire 3 quarters up ending 31st December, the volume impact has been 53%.
Right, sir. And sir, in terms of the realization, so what has been the realization that gains during this quarter?
Realization? I have not understood the question, sir.
How much pricing increase we have taken during this quarter, sir?
Pricing increase? Yeah. The pricing in this quarter has been 26.5%.
Right, sir. So also just to get a sense, because it's been a higher realization, like we have taken a decent amount of pricing increase, that is eventually reflecting in our numbers as well. So is it primarily because the MNCs have also passed it across to the end consumers, taking in view the higher commodity prices which are there in the global markets?
It could be. It could be that that is one of the factors.
Right, sir. So simultaneously, the amount of equivalent, like the percentage hike, has been comparative as per the what MNCs have taken. Is my understanding correct?
No, I mean I'm not able to comment on that because it's very difficult to understand the strategies of MNCs. They make it more complicated by giving a higher amount in the price list and then giving discounts or incentives behind the back end.
Right.
But I guess that must have been one of the factors.
And sir, also, if I look at the gross margin profile, so there has been a decent amount of jump if I look at the NAFTA margins or the North American margins. So can you give us a brief sense what has been the key contributors behind such a spike in the gross margins, if I see from that region?
I think one of the main important factors is availability of the products on the part of our competitors.
So inventory situation has dried up out there in the North American markets? Is
yes,
it
sir.
One of the reasons?
Yes, please.
Okay, sir. That's it from my side, sir. Thank you so much.
Thank you. The next question is from the line of Siddharth Gadekar from Equirus. Please go ahead.
Hello.
Hello.
Yeah. So I had one question. One is regarding, so if you look at the active ingredient prices from China, so YOY, if I compare for 3Q FY22 versus 3Q FY21, it broadly appears that prices have increased anywhere between 30% to 300% YOY. In terms of that, did we face any challenges in sourcing our active ingredients from China? One. Secondly, have we taken the entire price hike in this quarter, or there could be some more price hikes which could reflect in the fourth quarter?
No, I think we've taken the effect of the price rise till the third quarter. Fourth quarter, we are still to see how the price rise or prices behave. We have to follow the trend in the market.
Okay, so there was no major inventory gain that we were carrying some low-cost inventory. Because of that, we have seen this kind of a margin increase. Is that understanding right?
I would say marginal advantage of the price rise in the inventory.
Okay, got it.
Thank you. The next question is from the line of Rohit Nagraj from MK Global. Please go ahead.
Yeah, thanks for the opportunity and congrats on a very good set of numbers. So the first question is in terms of the logistics and freight cost. You indicated that in Q3 also we had seen some pressure. Coming into Q4, how are we seeing the situation, alleviation in the freight as well as logistic cost? And given that for the next couple of months, how are we seeing those rates? Probably we would have booked shipments from China to other geographies. Thank you.
Mr. Nagraj, the pain continues to be there, but the encouraging thing to be seen is that there is no further increase in the freights, and slightly there is a small softening of the freight rates as well as availability of the shipping space. but they are still very painful, very heavy, but I see the trend is slightly easing out.
Right, sir. Got it. So the second question is, you indicated just for a particular participant that on China availability of materials, it is relatively easing out as far as 2022 is concerned. So given this case, would there be some pressure on us in terms of volume growth, given that for the first 9 months we have grown because probably the competition was having relatively lesser amount of stocks or inventory, and we were better positioned in terms of materials. So would that impact, say, FY23 volume growth for us? Thank you.
It will not impact adversely, Mr. Nagaraj. We feel it may impact positively.
Fair enough, sir. That's really helpful. Thank you so much, and best of luck.
Thank you.
Thank you. The next question is from the line of Dhruv from HDFC AMC. Please go ahead.
Thank you so much. Congratulations, sir. Very good set of numbers. Sir, first question is a bit repetition of the earlier one. Sir, in the last few calls in this call, you have mentioned that the disruption from China and the freight issue has benefited us because we have been more agile versus probably the competitors. But sir, you also mentioned that this is now easing, freight is also not increasing further, and China is also improving. So, but still you don't see a risk to the existing sales or the growth forecast. So sir, if you can help us, what's driving this probably confidence in terms of the stability of sales growth?
Mr. Dhruv, it's partly my hunch, my confidence. I do not know if the competitors will be able to take immediate advantage of the easing out situation. But we feel that we are feeling more at peace than the things have been there in the past.
So it seems basically the distributors which were buying from you have now, which were probably buying from others have shifted to you, and that is why, because in the earlier call you mentioned the number of distributors as such have not increased significantly. It is the existing distributors buying more from you. So do you see the shift to you by the distributors as more permanent, and they will continue to buy more from you because of some underlying change which has happened in the market?
Sir, I have not said that the number of distributors has not been increasing.
No, I mean not a significant increase.
Number of distributors also. I think there's a small misunderstanding here, and the distributors are finding our service much better to suit their requirements, and they are patronizing us. That's the only thing I can say.
Got it. So even as the situation normalizes, be it from freight or availability from China, you don't see that the current base declining and then you growing. I mean, you can grow on the existing base itself.
Yes, sir. We will be able to grow. It will not affect our growth. Easing of the situation could go also to our advantage.
And so why do you say that? So because now it's improving and now it's easing. So how does it come to advantage then?
Less painful. Less uncertainties.
Okay, got it. So I thought that was benefiting you, this uncertainty and the lack of transparency in the system was benefiting you. But even as it improves, that will also still benefit you.
I'm making a comparative statement as compared to the competitors.
Okay, got it. So the second question was on the use of cash. Now, sir, given the sustainability of this run rate, you are generating decent quantum of cash, and your capex requirement, I believe, is around 300 crores, which can be. The FCF generation is quite healthy. So, sir, just some thoughts on probably increase in dividend or any use of some cap on this capital allocation thing.
Mr. Dhruv, you'll have to speak a little loudly. And when you were putting your question, there was an aircraft passing over our building, so I could not hear you very clearly. I would request you to please repeat the question once again.
Yes, sir. So I was saying that FCF generation, free cash flow generation now will be very strong, and capex requirement, I believe, is around 300 odd crores, which can be sufficiently met with which was already getting met with the existing business. So, sir, any plans for probably increasing dividend or using, some thoughts on the capital allocation thing?
We are looking into that direction.
on the dividend. Okay. Okay. And the capex remains at 300 crores, right, sir?
More or less.
Got it. And so one last question, quick one, is, sir, is it possible to share what would be the market share of some of your, say, for example, the top 3 products individually? What will be the market share in these products be? Say, for example, let us talk about Europe. You might have an X molecule. What I'll say top 1 molecule. What would be the market share in that molecule for you in Europe, or any representative, sense that you can give us?
Mr. Dhruv, we are a very small fry in the world and global market. And our market share will not be more than 10% in any geography, any country, for any molecule.
Okay. Okay. So 10% would be the max for any even if you are top molecules.
It is not a very precisely calculated figure. It is just an estimate that it will not be more than 10%. It could be even 8%, 7%.
Yeah, got it. Sure, sir. Great, sir. Congrats and thanks so much.
Thank you.
Thank you. The next question is from the line of Archit Joshi from Dolat Capital. Please go ahead.
Thank you for the opportunity, sir, and congrats for a great set of numbers. Sir, I was just trying to understand a bit more on the commentary that you gave for the growth that we have registered, a very healthy growth number this quarter. Sir, is it that other than the dried up inventory that you are talking about, were there some molecules that were registered off late which were picked up by distributors, and there was a strong volume growth for some of the molecules which were in the pipeline and then fructified into sales volumes? Is it that, or it was just the inventory situation which helped us? I'm looking at it from a more sustainability perspective. I mean, if this growth can sustain going ahead.
Just give me some time for the aircraft to pass over our building once again. Mr. Archit, when we get a new molecule, it does not have an impact immediately. Ours is a seasonal business. Sometimes we register a molecule when the product, which is off season for the product, And to introduce the product into the market also takes at least 1 or 2 seasons. So most of this is from the products which were registered in the previous years. Some products have helped us during this year.
Got it, sir. Sir, so basically, it will was this just like a one-off quarter? I mean, because if you look at the growth numbers, I think in the last 9-10 quarters, we haven't seen NAFTA doing better than Europe, not just in terms of sales, but also in terms of gross margins. So just was a little curious to understand where is this coming from, and would this situation, if not this high, at least in mid-teens, would we be able to see growth in the ensuing quarters?
Yes, sir. That's right.
Got it, sir. Thank you. Thanks for the clarification. Thank you. That's it from my side.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thank you. Very good afternoon, and congratulations on a very good set of numbers. Sir, 2 questions. One is on the non-agro business. Sir, what has been the driver for that business? It's also grown very well in this year.
Give me 1 minute. There are many aircraft passing over our office. The non-agro business has grown again because of proper strategizing the requirements. And just remember, most of the non-agro business is made to order. In the non-agro business, there is no stocking and selling. We receive orders, and we have to get the products made as per the requirements and specifications of the customers and then deliver. So probably here also our customers have found Sharda a better source to supply them the products within their expected timelines compared to the competitors. So it is mainly based on the service and deliveries.
And so if you can just
help us to remind us what is the main contribution, main products that we there in this business? Hello.
Hello.
Sir, and this business, what would be the main products in this business, sir?
Sir, the quality of voice has gone down very substantially. It needs to be improved.
Can you hear me, sir?
Now I can hear you.
So I'm saying, what would be the main products that we make for the customers in this business? It is largely the belts business or something else which is there along with it?
No, largely the belts and also other products, We get them made after we receive the orders from the customers.
And the last question on this one, what would be the gross margin in this business in general, over the say 9 months or so?
1 minute. Gross margin in this business is around 13 to 14%.
Okay, sir. And sir, lastly on the agrochemical business, we've had about 50% volume growth or thereabouts you mentioned for the 9 months. Is it possible to, sir, break it between existing products and new products in terms of what would have driven the volume growth?
It's not so easy, and we haven't done that analysis.
Okay, sir. And sir, just lastly, you also answered that to the previous participants, but this is a very high growth year. We'll probably be growing 50% or so in our volumes, assuming the trends sustained for this last quarter also. On this high base which is there, what would be, if you take a 3 to 5 year view of the business, what is a normalized volume growth that one can think this business can achieve 15%, 20%? What is the normalized level of volume growth we can achieve, sir?
I would say around 20%.
And with margin, with some value increases because we are doing relatively more higher value products as we go forward.
I feel that we should be also able to maintain the margins.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Sonal Minas from Percent Capital. Please go ahead.
Hi, sir. Am I audible?
Yes, please.
Sir, had 2 questions. One was around the Europe business. Wanted to understand, you mentioned that the reason you've done exceptionally well in this 9 months and this quarter has been your service and the inventory levels of the competition. But on the service, just want to, sir, double click and understand what do the distributors say about the product in terms of the yield of your product being better than competition, or is there some other quantitative factor about the productivity of the product which is important? Why am I asking this is to understand also the stickiness of the business over the course of next 1, 2, 3 years given the product specifications. I hope I'm clear on that, sir, the question here.
Mr. Sonal, if I understood your question correctly, do you mean performance of our product compared to the competition?
Yes, sir, performance. Yes, sir, performance. Yes.
I think our product is performing very well. I do not know if they had any bad experience with the competition, but our product is performing very well. And you must know that when we deal with agrochemical products, the quality and lot of parameters are decided by the registration authorities, which we have to comply with.
Sure.
And our product has to be equivalent in all respects to the innovator's product. So when these are the factors which are taken care of at the production stage, then the performance is more or less following. Unless, of course, there is some variation or deficiency at the stage of application on the part of the farmers or some other adverse weather effect. So there is no complaint about the performance of our product.
Okay. And sir, a follow on there, what is the pricing gap of our products in general? Maybe we can just compare Europe, our products versus, let's say, the larger competition there, and has that pricing gap narrowed over the course of last 1 or 2 years? Just want to understand that.
Sir, we try to understand the pricing of our big brothers, that is our leaders who are multinational and innovators. We try to price our product at about 10%, around plus or minus 10% of the innovator's product. But the biggest secret about the innovator's product is that it is not a very open and transparent information.
I understand. Okay.
Yeah.
And this pricing, sir, just on your hunch or whatever you've understood from the distributors, has that gap narrowed because of inventory shortages in the last 1 year?
It could have been, but not very significantly.
Okay. Understand that. That's it from my side. Thank you.
Thank you. The next question is from the line of Gagan Tareja from ASK Investment Managers. Please go ahead.
Good afternoon, sir. Am I audible?
No, sir.
Mr. Tareja, if you can speak closer to the handset, please. Your voice is not audible.
Okay. Is it better now? Can you hear me now? Okay.
Yes, it is better now.
Yes, sir. My first question is around timeline approximate timeline for the pending registrations, or what time can they be registered and brought to market?
It's very difficult, Mr. Taneja. We need to consult an astrologist for these things, No logic works in the process of registrations, and no forecast works over there. Because we are dependent upon a lot of uncertain factors. One is the bureaucracy of the registration authorities. They have to meet, representatives from various ministries have to get together and meet, take a decision. Second is the trials on the field. Weather conditions, the infections during the weather. There are a lot of uncertain factors, and I don't think it is possible for anybody to make a guess and predict and achieve a defined timeline for the registration.
Okay. And to a previous participant, you indicated that on your current sales base post FY22, you think 20% annualized growth is sustainable. Are you talking about volume growth, or are you saying that it's rupee term growth of 20% which is sustainable going ahead?
Volume growth.
Volume growth. And in terms of pricing, it has been very volatile the last entire year. Input prices moved up. You've been very proactive and taken price increases and passed them on. Do you foresee a situation where next year prices move down sharply also?
I don't think it will move down sharply. If there is a decline, it will be very gradual and slow.
Okay, a gradual and slow decline. Sir,
yeah.
And this year's 50% volume growth, you indicated that it's partly coming from your competitors not being able to put inventory in the market, and partly your own efficiencies. If you could give us some ballpark idea as to one, are your major competitors based out of China itself? Secondly, with an easing input material situation, when they come back into the market and try to take back share which they have lost by aggressively pricing, how are you thinking about strategizing around that and sort of maintaining the market share that you gained in the last year maybe?
Mr. Tareja, you have made your question very long. I have understood some part of your question which will be easier for me to answer.
Sure,
is our competitors.
Mm-hmm.
Now, and whether they are from China directly. No, they are not from China directly.
Okay.
Chinese producers believe in production and not investing in an intangible asset like registration.
Okay.
So China is not our direct competitor for any of these markets.
Right. And sir, secondly, your competitors will invariably, in an easing input material scenario, want to grab back some volume share which they might have lost in the last year. You indicated that they could not supply and you gained at their expense. So consequently, I am, inferring that they will also want to take back whatever share they lost and therefore maybe go a little aggressive in pricing. Do you foresee a situation where, some of the gains that you have made this year, which have come due to market share gains, might not stick or sustain, or do you feel that now, your situation with the distributors is strong enough for you to sustain your gained market share?
Mr. Tareja, we will find other avenues how to keep the growth of our products and keep penetrating into the market. And what I have stated, I am not saying with full confidence that this has been the fact. I am saying that this could be one of the reasons why we were able to get a better share of the market.
Right. And so finally, the NAFTA margins
Mr. Tareja, so sorry to interrupt, but for any follow-up questions, may we request you to rejoin the queue, please. The next question is from the line of Vishal Bidaiya from Max Life Insurance. Please go ahead.
Just one question. How has been the inventory scenario at the retail level, at the distributor level?
Inventory scenario at the retail level and distributor level? Your question is not very clear, Mr. Vishal.
So the retail channel chain in Europe and NAFTA, how has been the inventory at their end, at the retailer's end?
See, if I have understood these markets, my understanding of the markets is that the retailers don't maintain a very big stock. If they want a product, they send an inquiry, they want the product the next day or the third day. If I tell him that I'm going to get a product, it's on the sea or on the way, take a week, they don't come back to us.
Right,
so they want product very quickly whenever they come up with a demand.
Right, sir. And so the distributors will be maintaining all the inventory. So what is the kind of inventory levels that they would have? Would they have lower than normal inventory levels currently?
The distributor also would maintain minimum inventories. They all depend upon the registration holders to meet the requirements of the inventories as and when they want.
Okay. Thank you very much. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity.
Mr. Poddar, may we request you to speak closer to the handset, please?
Hello. Hello.
Still not sufficient. You have to speak a little louder.
Now it's better, sir?
Slightly better.
Okay. So just I wanted to understand now, you spoke about the several price hike that you have taken, and in the fourth quarter as well, you will see, depending upon the raw material situation, how do you place your price hike. Now, so just wanted to understand on the back of these, so how do you see your EBITDA margin sustainability? Now, it has increased over last maybe couple of quarters and standing about 20-21%. So is that the sustainable level that we are looking at going forward?
I think it is sustainable.
Okay, and what sort of improvement we are looking at over and above that, if at all?
It's very difficult to comment. I think it is sustainable, and we would our efforts would be to still improve as much as we can.
Fair enough. Okay, yeah, that's it from me. All the way back.
Thank you. The next question is from the line of Paras Etanwala from Capital Portfolio Advisors. Please go ahead.
Yeah, I was just looking at your numbers for the last 6 to 7 years, and I realized that on normalized basis, your operating margins are around 24%. So, do you think that is something which going ahead should be kind of you would be in a position to reach over there and maintain it?
Yes. We should be able to say we will be able to reach there and maintain.
Yes.
But we also said that you have seen that it's around 24% for last couple of years.
This year and for the last couple of years, it's been lower than that. This in the 9 months again, it's been around 20-21%. So you think you would be in a position to reach 24%, which has been a case in the past. You should be able to reach over there once again.
I would say that we should be there between 20 and 24%.
Okay. Secondly, your return on capital employed, considering the fact that you are essentially a marketing and distribution company, your return on capital employed should be significantly higher than what we are seeing right now. I've seen, that your competitors tend to do much better, despite the fact that they have good amount of manufacturing capacities. So, what would you have to comment on that, please?
1 minute. Let me see. See, I am not ready with this answer. You'll have to. You may contact us directly for this answer. I don't have an immediate answer to this question.
Okay, that's about it, please. Thank you very much.
Thank you. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
So thank you for your time. So you sounded one of the most optimistic and confident that I've heard, at least in the last 2-3 years, on your business prospect. If you could tell us, I know I understand your business, but if you could tell us what is it that you're doing slightly different? Because in general, the US agrochemical market is 3 to 5% is the growth rate. The large companies have also grown at 8 to 10% last 2-3 quarters. But if the growth slows down there, then how should we think about it?
Vishnu, I have not understood your question, sir. Can you repeat once again?
Okay. I'm just trying to understand, sir, because this strong growth that you have seen, what is that gives you super confidence that now that the growth rate will be much better than the past? I mean, is there any specific things, that we are doing that is going to drive this growth? If so, if you can just spell out a few things that you are doing differently versus what you've been doing till now.
Sir, the biggest factor is our understanding of the market. US market is very strange and difficult to understand. We feel that we understood the market over the last so many years and then accordingly play our cards.
Is the last 2-quarter growth because glyphosate was in short supply price-wise also, and are we seeing a benefit because we are operating in other products which is not there any big up move in our volume growth that has come because of this?
In context of glyphosate, it will be very difficult for me to comment. All I can say is that we have been able to meet the demands of the customers for the products that they have asked for, and many times we have to also decline. In spite of this growth, we have to decline many inquiries and demands because we do not have inventories ourselves. Now, whether it is related to glyphosate or availability and shortage of glyphosate, it will be very difficult for me to comment.
Any top 2-3 chemicals that you can give us names of which you have done well this season and after?
The chemicals we do not disclose in this kind of meetings, sir. It is our secret.
Understood. Sir, just again circling back on the growth front only, last 1 year things have been really great for the NAFTA and Europe market from a farmer income price point, which seeming to change as we speak, that farm income are coming down, fertilizer prices have gone up, generally the profitability of farmers are coming down. At the time, I'm asking actually 2 questions in the same one. Farm income coming down, and also there seems to be some sense of restocking that is getting completed. So should we see some of the end market slow down next 1 year or so? Are you seeing any signs? I know the current trend is very strong now. 1 year down the line, how do you see the end market and our growth accordingly?
Mr. Vishnu, I can only comment that most of our customers have never complained about availability of the funds with them to make payments on time. We have been receiving payments on time, and with slight incentives, we get payments before time. So that gives me an impression that the farmers are flush with funds. Now, where are they getting from and how are they getting? That is the next level which we have no time to go into.
Got it, sir. And one last question, sir.
Mr. Kumar, so sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please? Thank you.
The next question is from the line of Pushkar Jain from Sequent Investment. Please go ahead.
Hello, sir. So I wanted a breakup of volume region-wise for the 9 months. Can you provide that, sir?
Yes. Have you not provided this before? Okay. Mr. Pushkar, I'll give the breakup of the volume for the 9 months. Europe, it is 116 lakhs 64,000 kilograms. NAFTA, 87 lakh kilograms. Latin America, 38 lakh kilograms. And rest of the world, 26 lakh kilograms.
So just can you repeat the euro?
268 lakh kilograms. Yes, sir.
Can you just repeat the euro volume? Sorry, I missed that.
Europe is 116 lakhs.
Okay.
That is 11.67 million lakhs kilograms.
Okay. Thanks a lot, sir. And this actually has an increase of 50%, right? This is 50% in the current year as compared to the last 9 months.
Overall, yes.
Yes, sir. Overall, yeah. Okay. Thanks a lot, sir.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Manish Mahawar for closing comments. Over to you, sir.
Yeah, thank you, Stephen. On behalf of Antique Stock Broking, I would like to thank the team of Sharda Cropchem for providing us an opportunity to host the call. Bhuvna, would you like to make a closing comment, sir?
No, sir. I think you've spoken enough, and there's no further thing to add. The time is also, we have exceeded the time.
Sure, sir. Thanks. Yes, Stephen, we can close the call, please.
Thank you. Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference. We thank you all for joining us, and you may now disconnect your line.